Hi everyone, my name is Ben Raikes. I'm with Mason & Associates, and I wanted to talk to you about how distributions from your TSP are taxed. Now, it's actually really simple, but we're going to make it somewhat complicated and then make it really simple again. So there's a couple of different ways that you can actually take money from your TSP. One, we can take distributions from our TSP and send them directly to our bank account. Two, we can roll over the TSP distributions into an IRA or into another employment savings account. Or three, we can take distributions from our Roth TSP. And based on the way that we do those distributions is really going to impact how our TSP is taxed. Let's go over the most simple situation, which is rolling over that TSP. So I'm assuming a lot of you listening to this channel have probably worked with a financial advisor before, and you have probably completed a rollover, maybe not of a TSP, but maybe from a 401k or a 403b. And essentially what happens in a rollover is rather than the money being sent to you in your name into a bank account, that money is actually sent to an IRA or another employer account for the benefit of your name. So it's essentially going from TSP to IRA. And since you never get involved in that process, that is a completely tax-free distribution. Don't be scared. You will get a 1099-R at the end of the day to report this transaction, but it will have a code G in box 7, which essentially tells your tax software that that's a completely tax-free rollover. Okay. What is the other option to distribute from our TSP? Well, that's when we actually take those TSP distributions, and instead of sending them to another IRA or another employer account, we're actually sending those to our bank accounts because we want to use those distributions for our everyday living expenses. And this answer here is really simple. If you're taking from your traditional TSP, that distribution is going to be 100% federally taxable. So if you take $10,000 a month from your TSP, you're going to have $120,000 worth of ordinary income on your tax return. Furthermore, in reality, if you actually needed a net $10,000 a month from your TSP, you're actually probably going to distribute something like $12,000 to $13,000 a month, because before you get your 10, you're actually going to send $3,000 to the federal government. Now, on the state tax side, it's a little bit different because some states like North Carolina and others may exempt some or all of your TSP distributions from taxation. But in general, particularly in Virginia, those TSP distributions are going to be state taxable as well. And here's another caveat to the TSP. If you are, we mentioned before, withholding federal taxes before that distribution even gets to you, you can't withhold state taxes from TSP distributions, so you have to pay state taxes in another way because we can't withhold. So it ends up being a real pain. A lot of people don't know this. They say, why am I always owing money to the state of Virginia? Well, it's because you're withholding federal taxes from your TSP distributions, but you're not doing anything from the state, so you always have a nasty bill at the end of the year. The last way we can distribute from our TSP is we can take distributions from the Roth portion of our TSP. You've heard us talk about Roth IRAs on this channel and Roth TSPs on our podcast. When you take a distribution from your Roth TSP, a qualified distribution, that's going to be completely tax-free. So in a lot of cases, we don't need to withhold any taxes at all from that distribution because it's not showing up as taxable income on our return. Again, so we can make it seem really complicated here, but TSP distributions, unless it's a Roth or a rollover, they're going to be 100% taxable. Rollover is going to be tax-free. Roth is going to be tax-free. And the important part in all of this is coming up with a distribution plan for these distributions, making sure that you're working with a financial advisor so that we don't have a nasty tax bill at the end of the year, and to see, hey, you know what, Ben, I would prefer not to pay 100% ordinary income tax rates on all of my distributions. What strategies do you all have available to me so that maybe I can lessen this tax bill? Maybe we do Roth conversions leading up to retirement. Maybe we pull from a bank account. Maybe we pull from a taxable brokerage account and really have a blended mix of different tax buckets so that we can lower your tax bill in retirement. It's been great talking to you all today. Again, I'm Ben Raikes. I'm with Mason & Associates. Please like and subscribe to our channel. Ask us any questions that you may have. We love hearing from you.